guys, I'm back, and we've got the amazing Staria Clark, realtor extraordinaire here in Nashville, and women's advocate for home ownership, and we're going to talk all about that today. So welcome, Staria. Good to see you, always.
Yeah.
So I know that the market's wild right now. We're going to talk about that, but I really want to talk about this. You have a passion for really helping women specifically. Mm-hmm. I mean, you're a single woman. You have this amazing journey with real estate yourself. I mean, share with us kind of how that, blossomed into this passion that you have to help women succeed.
Oh man, what a journey. So I was so fortunate to have found real estate about almost 10 years ago now. And it really has changed my life and kind of set me free in so many ways. And I love being able to give that gift to other women as well. So one thing that is super important to me is when women have resources, they share them with their community. So the more women have, the more resources they have, the more that they can give and build and not only take care of themselves, but take care of the people around them. So, as women, we're natural givers and we're not always natural takers. And in order to invest in yourself, sometimes you have to take a hold of the own resources that you have available to you and build from there. So I learned how to give myself financial freedom and security through real estate. And so I just love being able to teach other women how to do that as well. It's so important, especially now more than ever, that we're able to protect ourselves, keep ourselves free and safe, and be able to know that we have a future in front of us that is only ours, that no one can take away.
I love that. It's like, what do you say when you encounter women and they want to invest in real estate but don't really know where to start, and they kind of worry that they can't do it alone?
Well, just like anything else, you need a team to support you, and you need somebody to show you how, right? So that's what we do. That's what me and my team does. That's what we do with Mark. So you need a great advocate in the space. Like, you need somebody to guide you, and you need somebody to teach you and show you how to do it. And you need to work with somebody who's done it themselves, right? All you need is one person that you see is doing the thing you want to do, and you can follow in their footsteps and see how they did it. So on the realtor side, I love being that person for people. And then on the lender side, Mark has always got us covered to find the best loan product and the best strategy.
It was like, there's probably, I think people come along, they have these misconceptions about real estate, right? What do you see when you talk to people? What are you combating, or what are you trying to unwind, where they've come to you and they've got these preconceived notions? What are some of those, or what is something you can think of that's maybe like a preconceived notion or some sort of misconception that, that you find yourself having to dispel?
Yeah, I'll pick the biggest one that I see is that real estate is risky. And there's going to be risk with any investment, right? Nothing is risk-free.
Renting is risky, is what someone said one time, right?
Everything.
Right? There's a risk in renting.
And I would say, as far as real estate goes, it's very near the bottom as far as a risk level in general. And so when people look at buying real estate and they think it's scary and dangerous and risky and it could go very wrong and you could lose a lot of money, those things are the minority, and that those happen when you don't do it the right way, right? And so we can protect ourselves from all of that from happening. So the biggest thing for me is that I see is that people think that real estate is hard, risky, and scary. And when I come in and I show them, here's a proven strategy that we can use to protect you and protect your money going forward, you're taking very, very little risk. You're taking less risk by buying real estate than you are putting your money in any other vehicle, including rent.
Right.
So,
and then, I think when you think about your own journey, I think I want to talk about the thing and bring this out that I think a lot of people are saying right now. Like, it's so much more expensive now, and it is. And I want to validate that. Like, when you got started, you bought your first home, versus now, it is more difficult. It is, the wages haven't kept up with the pace of the home prices increasing. So what do you say, convey your own journey to help people, to help women, when they're trying to say, look, I don't really think that I can do it. I don't think I can get started. It's just, it's the mountain's too high. It's
Yeah.
too late for me, that kind of thing.
Yeah, absolutely. Well, if it makes anyone feel any better, the last property that I bought was at the height of the real estate market. So I paid more then than what you're going to pay today, which was a couple of years ago. So if that makes anybody feel any better, we're still buying real estate today. And I'm still helping first-time home buyers, second, third, fourth, investors, people win in this real estate market. There's always a strategy that can win. It doesn't matter what the market is. Yes, it's more expensive. Yes, now that rates are higher, you're probably going to end up in a little bit less of a home or a lot less of a home than you would a few years ago when rates were half as much. That is an undeniable truth. However, real estate's still appreciating, and you're still making money on your money when you put it into real estate. So if you were to not buy today, a few years from now, you're taking a loss on that money. So it's never too late. You always need to start at some point. And I always tell everybody, buy what you can, when you can, where you can, and how you can. Whatever that means. Get whatever kind of loan you can qualify for. Buy whatever you can afford. Even if it's in a place that you don't want to live, let's make that into an investment property. That way you can stay in your downtown apartment and live the kind of lifestyle you want to have, but your money's still working for you in an investment property somewhere.
Yeah, a lot of times people, I think that they have to qualify for the payment for an investment property. And yet, while that's true, you do get to use the projected rent to help offset the payment. So there's a qualifying helper there with the projected rent. So,
yeah, absolutely.
A lot of times people forget that, or they think it's, and you do have to have a down payment, there's no doubt. But there's a whole philosophy out there. I think Grant Cardone is one who promotes this. I don't think I necessarily ascribe to it, but that to, buy an investment property first. And so I do talk to people sometimes, and that is like their strategy. And if that's what you want to do and you want to have that, and that's your strategy, I think that's a great one as well. I do think having a primary residence over time is definitely a positive and a net gain,
Yeah, I love talking about this because I love presenting people with both options. I did both. I do both. But for the longest time, I actually bought an investment property first. It's just the way that I chose to do it. So I did everything backwards. However, most of the time, what makes the most sense for people is to buy their primary residence first, take that money, let it grow, use that property as an investment over time in order to buy your next investment property. But that's not always the solution. I have a client who really wants to live in her high-rise downtown. It doesn't make sense to buy the equivalent type of condo for that lifestyle. It makes more sense to rent it, but she has the opportunity to buy an investment property and still have all of her money working in the real estate market for her. So she gets to keep the lifestyle that she wants, and her money is still working in real estate. And I think that's where a lot of people get lost, is they look at what they can afford as a primary residence, and they're like, I don't want that. I don't want to live in that. That's not the kind of home I want. That's not the neighborhood I want. That's just not the lifestyle I'm looking for. So I'd rather rent and keep the lifestyle that I have, and so I'm not going to buy. And I think there's a flaw in that strategy, because you can still buy and keep your lifestyle. So you can buy an investment property over here and let that money work for you. You can create cash flow. You can create appreciation. You can have both.
Right. Not to mention the tax benefits when, that real estate just provides that other investments don't. And, if you can get a really massive tax deduction, especially, I think a big strategy right now, people are buying a property, they live in it for a while, maybe a year, and then they convert that to a short-term rental. And by doing that, they get what's called a cost segregation study. And then they end up getting this huge tax deduction, which can even offset their earned income. So they're a nurse, they're a business owner, and whatever it may be. And all of a sudden, they have this huge income, and they're writing checks every year to the IRS, and now they can help offset that. So there's a lot of things that go with real estate, I think, that just you don't have with other investments. It's not to say don't invest in your 401k.
Both.
You know,
All of the
especially if
above.
if they're matching. You know, I think that's the best advice is, you know, anything that the company's going to match. But I just think it's very difficult to keep up with the pace, you know, of real estate appreciation, especially in this market. Where Nashville is just still such a highly desirable place to live, right? I mean,
Yeah.
what are you seeing right now with just, it seems to be pockets that's just hyper-local where it's still multiple offers, cash backup offers, things like that, but then other ones where price reductions are happening, right?
Yeah, boy, this market has been fun. Very interesting. And I'm talking to my buyers and my sellers multiple times a week about what we're seeing and how things are shifting. They're changing a lot. They're fast. They're changing very quickly. I saw 2 homes for a particular buyer, 2 homes in our search go under contract within a few days. And the average had been like 30 plus days on the market before that. So, you know, all of a sudden we're feeling a little bit of the spring heat hit the market. But it really depends on the niche that you're in. And I think at the end of the day, right now, buyers have a lot of options. They have a lot more inventory. There's across the board, we have a lot more inventory, which is great for buyers. So listings need to be priced really well and need to be very competitive. And if they are, then there is enough buyer demand for them to go very, very quickly.
Mm-hmm. You know, we've had a huge run up for appreciation, but then it's sort of sustained. So do you still hear people saying they're concerned about, you know, a crash, a pullback, you know, a correction, that kind of thing? Are you hearing that less or more?
Less. Yeah.
Okay. It's
less.
almost like, I feel like that people are accepting the fact that the message is getting through of the shortage of inventory, which means that, you know, housing should continue to increase in value for a while because it's just the supply and demand, you know, concept.
Yeah.
Right?
Yeah. Even if it's slower than it was, you know, from 2018 to 22, of course, you know, can't expect that kind of doubling in value to happen again. But then after that, I feel like we did have a bit of a correction. And some of those numbers have started to come back up again. So people that bought in that 22 period had some, not all, had a downward trend. And now we're back. We're already back to past where their purchase price was in 2022. And now we're stacking appreciation on that. And I'm the prime example of that. I bought a property in 22 and paid quite a lot for it, you know, relatively. I was shocked that I did that. And, you know, everything's relative. And I felt like it went down a little bit and now we're back up and now we're continuing higher. So things are still appreciating.
Right. I think it's amazing when you think about just this market, the way it's, you know, it's ebbed and flowed, but it's really never gone negative. I think slow appreciation, the pace of appreciation slowing is different than a pullback, you know, or different than prices going backwards, you know. And so, and I think that's where a lot of people kind of have FOMO, especially those who are maybe thinking about a move before rates tripled. And you know, they decided, well, I remember this idea where people were wanting their house to get the same that the neighbor across the street did, but it just wasn't there anymore because they had kind of caught it. It's just the same thing as when, you know, you can't be upset when someone else sells their stock at the absolute peak. Not everyone's going to do that, you know? But if you still are selling it at a profit, you know, and it's still a nice gain, a nice return, then I think that's the point, right?
Right.
You know,
and it's not real money until it's in your pocket, right? So we see these numbers and we see, oh, my home could have sold for $50,000 more than in 2022 or, you know, 2021, 2020 at that peak that we had. Maybe it could have sold a little bit more than it would even today, just depending on the property. It's not real money until it's converted into money in your pocket. And so when we get attached to those hypothetical numbers that we could have gotten, it feels like when we go to sell it today or make a move or, you know, even looking at the interest rates, it feels like we're taking a loss, but you never had that money, so you didn't lose it.
Right.
It's still a gain.
Right.
And every one of us sitting here today with all the little ups and downs that we've had in the market, every one of my clients that looked and shopped and didn't buy would be in so much of a better position if they had bought. It doesn't matter if it was 6 months ago, a year ago, 2 years ago. The further you go back, the better off they would be. But every single one of those buyers that decided this is too much, I'm just going to wait it out. This is not the right time. Every single one of those people would have more money in equity here today if they had bought. And that will be true again next year.
It's, yeah. That's such a great point. I think it's people are scared, I think, some just of getting into the market, what's going to happen.
It looks scary if you don't understand it.
And I think that's where you do such a great job of just managing client expectations, managing their fears, because you've done this before. So, I mean, like if somebody's coming in to you, what do you say to them? Like, what's actionable steps that they can take? You know, if they want to scale or if they want to just get into the real estate right now.
Starting from the very beginning, if somebody's never done this before, a conversation with a great lender is really going to give you so much comfort, so much education, and so many options. You can qualify for more than you think you're going to qualify for, and you actually probably will bring less money to the table than you think that you need to. And so having those solid answers on what you actually need, how much income you actually need, how much savings you actually need, how much of a down payment, what do those numbers actually look like? Then we can do something about them, right? So don't let the illusion of like, well, I think I'm going to need this much, or I think this is how it's going to go. Find out. Let's get black and white answers, like on paper, and look at like what needs to happen. Do you need to, get a raise? Do you need to work more hours? Like what needs to change in order to qualify you for your first home? And like, let's look at some actual strategies. Right. There's no harm in playing out some hypotheticals. And so just talking to us and exploring your options is where somebody should start.
Say someone already has a home and maybe they've bought and sold, but they've pretty much only ever owned a primary residence. What do you say to somebody that says, hey, I'm looking to try to scale? Maybe they don't even say the word scale, but that's really kind of what you hear.
Yeah.
They're describing. How do you help them? What do you say to that?
Yeah, so this is one of my favorite pieces actually, is helping somebody make that jump from homeowner to investor. And this is really where I thrive, and I love helping women go from 1 to 2 to 3 to 4. And so one of my favorite things about this business is helping women start and scale their real estate portfolios. Your first property can get you your second, and your second will get you your third, and so on and so forth. And then once you get to a certain point, you have so much equity that once you start refinancing them, lumping them together, it becomes such a big snowball that it's so much easier to take down bigger properties, and you're playing a whole different game. So one of the most challenging parts is in the beginning is just going from 1 to 2. There are many different ways to do that. When you've had a primary residence, you can sell and keep all of the gains from that tax-free up to $250,000. So you can roll that into a new property that would create a greater investment for you. Or sometimes it makes sense to refinance. Typically not right now, but it will soon, hopefully. And sometimes a home equity line of credit is what you need to. And then sometimes you just already have enough cash in the bank. One of my favorite strategies is taking your primary and turning that one into your rental, and then buying another property, because every 2 years you can qualify for a new owner-occupied loan and put as little as, 3.5%?
Well, be 5%.
5% down, right? So that is doable for most people that are looking to make that jump. So where are you going to get that 5%? From your savings, from your own investments? Is it from a home equity line of credit from your previous home? Like, let's look at all those different options to get you that 5% and get you into that next property. That's a personal strategy that I employ because I love doing that. Like continually buying a new property every 2 years with 5% down.
Mm-hmm.
And some people, you'll have so many.
Exactly. And probably some of you guys have heard of this term, but it's there's a term, it's called house hacking, and that's really, this is one example of that. And another one is renting out a room. But I understand if you have a family, you have kids, whatever, that's not necessarily a good option. But another thing I'm seeing people do is add an ADU on the back, so they have a living space above a garage. They're renting that out. Or they're converting a space, into a living space. And so maybe it has its own door, or they can do some modifications to the home. All of a sudden now you have an area where you have a renter that's actually helping pay for your housing, which can help free you up to buy other property, right?
Right. We love that. And that's something that I help a lot of my clients shop for too, is looking for those properties that have the potential to add something on. So you're able to create more income later on. So like, can you build a garage apartment in the back? Can you add an addition? Can you convert your basement? So if we're looking for properties that are going to maximize your investment in the market, let's find you something that can do that.
Right.
And then you have 2 units.
So are you seeing right now, is even just within, certain parts of town, it's even just the neighborhoods and certain streets that are even hotter than others, right?
Yeah.
I mean, it's just so hyper local. It's like so dialed in.
Yes. Little pocket neighborhoods.
I mean, here we are. We're towards the end of March 2025. What are you seeing right now? I mean, comment. What would you say about places that are maybe a little bit easier, and then what's maybe super duper competitive?
So right now, as of today, buyers can still get a really good deal on a lot of new construction that's been sitting over the winter. That's amazing. Here recently, I've gotten more than one client into properties that have come in way under appraisal. That means they're walking into equity, which is crazy. We haven't really seen that in our market in quite a long time. Typically, our appraisal is going to come in right at value. It has usually for a while. With the market shifting a little bit and buyers having a little bit more of an advantage, I was able to get people in under the appraisal. So they're already walking into that property with some equity, which is awesome. So I would say right now, as of today, I kind of expect this to change a little bit over the next few weeks as the spring market hits. But if you want to write some offers right now, buyers can still get a really good deal. They can get their concessions paid. They can get money off the purchase price. They can get maybe a buy down, especially if it's new construction. Sellers are really willing to work a deal.
Yeah. And I want to talk about that because there's this idea around new construction that's I think very important to understand, and that's is certain builders actually own the mortgage company, and when they do that, they'll offer these huge concessions, sometimes $15,000, $25,000 in upgrades to the home, and or maybe you can use that towards their closing costs. And if that's a true credit and they're giving a great rate with that, that's a really great deal, and it's very difficult for anyone in the open market to get that. The other thing that they do, a lot of builders, is they'll buy a block of interest rates. So that may be something that's really out of the market. So that could be like a 5% interest rate, 4.99. And what they've done is that builder has gone and bought a block of loans, and to deliver those, they're promising to deliver these loans at a certain rate, and they're just going to pay whatever it costs to buy it down to that. So then they're extending that in their advertisement. So those are both good deals. I will say, however, there are often times where we're looking at estimates from the builder and it's really not a great deal. Their preferred lender is the one that's giving them an estimate, but they're really just charging it in one place. But they're giving you a credit in one place, but they're charging it back to you in another place. And what we found is that we see sometimes when we look at these estimates that it's actually not a good deal, and we end up giving the client a better rate with lower closing costs than the preferred lender. So it really just depends, and that's why I think it's always good to sort of double check yourself. Now, I'll be the first. There's many times, it's probably more often than not, but it's probably 60% of the time that I say, congratulations, this is an amazing deal. No one's really going to be able to beat that. The builder owns the mortgage company. And so these are like these huge spec home, tract home builders, where they're building entire neighborhoods a lot of the time. But the more smaller the builder, the more likely that it's just someone that's partnered up with them, and it may or may not be that great of a deal. So, just something to keep in mind. So what do you see as we move into the spring? Is activity picking up?
Slightly. Like literally over the past week, I've seen more activity. So hoping that's a really good sign. Yeah. And people are just ready. No matter what has, like, even though nothing has technically changed, every year it's real estate cyclical. Like, we're going to have more of a spring market. Even if rates have not gone down in the way that we thought that they might or could have or whatever. Even if nothing changes, there's going to be an increase in activity just because it's the spring.
Well, and the projections are that there will be more transactions closed this year than last year.
Yes.
So what you can deduce from that is that there's going to be a healthy competition, home prices should continue to rise. So still, a great investment. If you look back over the last 100 years, I want to say it's maybe 8 times where the real estate market has gone down. And so it's something like 80, 90 years of properties going up in value. So it's just still a very, very good investment, safe investment. You know, and I think Nashville area is one of the best places to live. We still have people coming here for the schools, for the lifestyle, for the cost of living being much less. You still have people that are coming in that are cash buyers because they moved from somewhere that was super expensive.
Yeah.
And here it's just like, wow, this is a great deal. I mean, yesterday I was talking to someone who was renting their property out for just a ridiculous amount of money in Los Angeles. He moved here 3 weeks ago with his family, business owner, and is renting out his place. His mortgage note is like $5,000, but he's renting out his house out for $20,000. So, you know, they come here, it's just a much different situation. Yeah. And I think people just love it here. Right?
Yeah, they really do. I mean, I'm still getting out-of-state clients all the time. The
secret's out.
Yeah, for sure. I mean, our taxes are great here. Property taxes are lower. There's no state income tax. Our prices are affordable compared to a lot of other places in the country. And just to go back to like a general point too, is when you put your money in real estate, you're protecting it from inflation. And so if people have cash, they have however much money in cash to put into the real estate market, it's so much safer here. And it's actually a lot safer from natural disasters here as well than it is a lot of other places in the country. So Nashville, Tennessee is super attractive. We're going to continue to pull in those out-of-state buyers. Yeah.
Any parting thoughts? Any parting messages you want to say to those out there? I mean, actionable steps. We talked about that. You know, house hacking. I think it's a great way. You know, you buy a house, you can live in it a year, turn around, and a year later you can buy another. You can turn that one into a rental and buy the next one for 5% down, and the first one you can buy for maybe 0 down or as little as 3% down.
Yeah.
You know?
Yeah, absolutely. I think what I tell all of my people, my community, my friends, my family, everybody all the time is just, it's easier than you think. And with the right guidance, it is a very safe investment. So you don't have to be worried about this going wrong for you. You don't have to be worried about losing all of your savings. You don't have to be worried about going underwater. There's many different ways to do this, but we can guide you in the right way, the smart way, the financially smart way, so you're very protected. And like I said before, nobody that has ever bought with me has ever looked back and been like, that was a really bad decision. It is
That's
always
huge. That's
made
impactful.
them money every time.
Wow. Well, guys, thanks so much for tuning in. Staria, we appreciate you coming on,
Thank you so much.
we'll look forward to seeing you again soon.
Yeah, thank
All
you
right.
so much for having me.
Thanks.